Hello and welcome to Simplify Tax Compliance with Avalara. This webcast is brought to you by CPA Practice Advisor and Avalara. I'm Gail Perry, Editor-in-Chief of CPA Practice Advisor, and I'll be your moderator today. Before we get started, I'd like to explain how CPE for this webcast works. First of all, the webcast is 50 minutes and qualifies for 1 credit of continuing professional education. If you plan to earn CPE for attending this session, you must stay with us for the entire 50 minutes. In addition, we will display 4 polling questions during the webcast. In each poll, you need to record an answer, as this is our verification that you are still watching. Later today, you'll receive an email from CPA Practice Advisor containing a link to your CPE certificate, assuming that you met the qualifications for certification. Please note that we can give CPE credit for multiple people at the same location. So if there are others in your office who would like to attend this event at the same computer, please have them join you now. And at the end of the event, we'll provide you with information to send us their names and email addresses so they too can qualify for CPE. At any time, you can enter questions in the Ask a Question box on the left side of your screen, and our speakers will try to get to as many questions as possible during the presentation. Questions not answered during this broadcast will be addressed by the speakers afterwards via email. If you have any difficulty answering the polling questions online, you can always post your answers to polling questions in this Ask a Question box, and we'll record them there. The slides for this event are available for download. If you click the Event Resources button at the bottom left of your screen, and then click on the PDF that's displayed, those are the slides for this presentation. Also, the archived version of this presentation will appear on the CPA Practice Advisor website after the event ends under the Webinars section of our menu. We're grateful to Avalara today for making this event possible and for enabling us to offer a free CPE credit to each of our attendees. Today, we're joined by Diana DiBello and John Solis from Avalara, who will be presenting this webcast. Welcome, Diana and John.
Hi, thank you, Gail. Just to kind of look at the first slide here, today we're going to talk about simplifying tax compliance with Avalara. And to just do some quick introductions, my name's John Solis. I've actually been working here at Avalara for about 10 years, been focused on the tax automation piece for about 22 years, and then I've been in the tax industry for about 30. Diana?
And I am Diana DiBello, and I have been working in the tax automation industry for well over 25 years, both with companies like Avalara and also on the implementation side, consulting to implement tax systems for companies.
Awesome. Thank you, Diana. Looking forward to chatting today with you. So just a real quick agenda here. We just went through introductions, and then we're going to go into a little bit about tracking sales for Economic Nexus. So again, on the area of sales and use taxes, we're going to sort of go into like the things that, firms think about for their clients. And one of them is tracking sales, and we're going to go into that a little bit specific to Economic Nexus. We're going to talk a little bit about the issues they face and they have to track when they're dealing with tax rules across different states. Then we're going to specifically go into implementing some tax solutions and kind of go into the end-to-end conversation around sales and use tax and compliance, talking about calculation through the actual returns filing piece. Then Diana's going to go in and show you how firms can actually utilize some of the tools that we have here at Avalara to help manage that information. And then certainly we'll finish off with some questions here at the end. But first, we have a quick poll question.
Okay, this is our first question, first of 4 questions. And the question is, what is the staff size of your firm? And you're presented with several options here on screen, which include 1 to 5, 6 to 25, 26 to 50, 51 to 250, 251 to 500, over 500, or not applicable if you don't happen to be in a firm. So pick the one that's most appropriate to you and then click the submit button. And we'll go ahead and monitor this and display the results in a few seconds after we give people enough time to answer.
And John, I think that, the firms are so excited about sales and use tax. Don't you think most accounting firms love addressing sales and use tax? I say
Depends if
tongue in cheek,
It depends if they want to talk about it, right? It's one of those topics that always comes up, and then depending on the
right?
firm and what they want to focus on, like how important that is, well, with their discussions with their client. We're hoping we're going to make that all a lot easier for everyone here today.
Absolutely. And I'm seeing that so far, a vast majority of the firms on the call today are 1 to 5
Yeah, so size-wise,
folks.
looks like they're about 1 to 5.
Yeah.
Okay, okay, good to know the vast majority. Okay, perfect.
Yeah.
All
All
right,
right, I think
just
we're ready to move on then.
awesome. Going to the next one, we're gonna, as we mentioned, we're gonna dive in a little bit into economic nexus now and about tracking sales. And I'm gonna actually pass it over to Diana.
Great. So we talk all the time about sales tax nexus. It has been a topic of conversation for many, many years. I hate to admit it, but I was actually working in this industry when Quill versus North Dakota was handed down, and I won't even say the year, but it was a long, long time ago. So that was the law of the land, basically, in the precedent setting case from the US Supreme Court up until 2018 when Wayfair hit. And that changed everything. So we're going to have a slide on Wayfair, but for sales tax nexus, that is the connection that to be established between a seller and the state in order for the state to require them to collect the tax. So that's basically the information there for sales tax nexus. If we go to the next one, we'll talk about the different types of nexus. So everything you've been hearing about for the past few years is economic nexus, but there are all sorts of different nexus requirements for the states, including physical nexus. So things like employees in the state, property in the state, even having inventory in the state could trigger a nexus requirement to collect in that state. We
You,
talked
you know,
about the economic, go ahead.
the question I always get, like this, just one, the one I usually get, is does one employee mean I have to actually register in that state and collect taxes?
Well, it depends. We were joking before this call that all our answers to all the questions are going to be it depends. But yeah, it could trigger the requirement. And typically the measure we talk about is employee paid 50,000 or more in salary. But it could vary. I mean, if you have employees, everyone's working remote now. So having an employee in a jurisdiction may trigger that nexus. Click through nexus. So this is the type of nexus when a sales threshold in a state from the activities in an in-state referral agent. So think about all those cool links that you get for things that you're talking about around your cell phone, the ads to get, new shoes or new office equipment. All of those ads that are click-through ads can drive revenue and can create that nexus threshold in the state. Affiliate nexus is one that a lot of people don't think about, but it's important to look at your contracts with affiliates and with subs. If there are subcontractors, they could actually create nexus for you depending on the relationship between the company and the affiliate. And then, of course, there's marketplace nexus for marketplace facilitators. So they may be required to collect and remit the tax on behalf of their sellers. Now, the important thing to note, and we'll probably talk about this a little bit later on in the session, is that those sales are going to be attributed to the sellers. So those sales may be included in the threshold for the sellers selling on the marketplace. So a small company selling on Amazon, if they have a great month in a particular state, they may trigger a nexus requirement. Okay. I don't know if you had anything else to add there, John.
No, I'm good at that. My next one's
Okay.
the slide is the favorite one.
Oh, yes. So South Dakota versus Wayfair, that was a huge change to the way things are approached from a nexus perspective. So in June of 2018, I remember the day very well. Um, the U.S. Supreme Court handed down their decision in South Dakota versus Wayfair, stating that the physical presence standard from Full Court versus North Dakota is no longer necessary, that they could use economic nexus thresholds in order to create that nexus requirement for sellers to collect in the states. And all
And
45 states with a state sales tax, there are 5 that don't have a state sales tax, have adopted an economic nexus threshold.
I remember when the rule was coming up, or we were actually just coming off a show season. I was with a bunch of people I've been working with for years. I'm old. I've been doing this for a while, right? And we were all talking about it, and we all kind of came to the conclusion that there was absolutely no way
Right,
they were going to side with the states on this, right? We are like, there's no way. And then it came out in like, having at Avalara, like we were constantly talking to people about it, but we were never talking to them. We were always talking to larger companies about the topic. And then when actually it passed, like all of a sudden, like all these other companies had to like worry and think about it now. We just didn't think it was going to happen. I,
right.
I will say as a tax provider, it does make it a lot more cut and dry if you actually
Yes.
have to register. We used to have to do all this analysis beforehand to figure out like the click-through nexus, or like are they physically
Yeah.
there, and like when they shifted over to the revenue, like how much revenue you getting in, not revenue, how much sales are you getting in that state. It made it
Right.
so much easier to think through from my perspective.
Absolutely. And then I think too, on the accrual side for use tax, it actually decreased um, the number of vendors that are not charging tax.
Yes.
So I think that most companies are charging tax now because they know that they're required to charge the tax.
Right.
Well, in
What
most cases they are.
yeah. What Diana's referring to is like a lot of companies would, if you buy something and you don't get charged tax, really you should be thinking about self-assessing the tax on it. And like since more companies are actually charging tax now, it's like now you're spending more time checking the tax that when you're paying
Right.
a bill than actually self-assessing it.
Yep. All right. So these are the different economic nexus thresholds by state. So of course, why would the states be consistent?
Of course not.
They vary greatly from $100,000 to $500,000 in sales. So Connecticut's threshold, for example, is $100,000 in gross receipts and 200 retail transactions. And New York's is 500,000 and 100 transactions. So it does vary greatly. Or there are some that are 100,000 or 200 transactions. So you really need to understand the different laws in all the different states in order to see if your clients are bumping up against an economic threshold. In a state that has a count of transactions and they're selling, you know, dollar widgets, they could easily hit that economic threshold and be required to collect and remit in that jurisdiction.
So not only do you need to track the number of invoices you're sending into each state, you got to track the total dollar volume you're
Right.
shipping or sending into that state. And then in addition to that, you got to make sure that the state may or may not include those exempt sales. So it's various things you need to think through. But I still think it's a little easier to do it this way than it does trying to figure out where they were physically located. Well,
Right.
on the old
Right.
rules. That's me.
Yes. Especially looking at the affiliate and the click through nexus, those
Yeah.
were challenging when you were dealing with clients. Definitely. All right. And then here is, John just alluded to this. Some states will include exempt sales in the sales amount to evaluate for an economic nexus threshold, and some states will exclude it. So again, that adds a nuance to understanding what's included, what's not, and it makes it a challenge for small companies to manage. Even big companies I talk to on a daily basis, and they can't keep it straight. So
And
we're here
that's
to
actually
help.
a good point. That's a good point because larger companies buy and sell companies all the time, or add or subtract
Right.
them and like, it, let's just say occasionally I've been brought in after they bought a company to review it because they
Yes.
probably weren't in compliance before the sale occurred, which is my
Yes.
old job, what I used to do. But
Yep.
all all good.
All
And we
right.
come to
Our
our next
next
polling
poll
question.
question.
Okay, this is our second of 4 polling questions. The question is, how many clients do you have with sales tax obligations? So we kind of like to see what the lay of the land is with this audience. And your answer options are none, or some, meaning about 25%, many, which would be about half of your clients, most, which is about 75%, or all of your clients, 100%, or not applicable if you don't have clients with sales tax obligations. So click the option most appropriate to you. And then click
Interesting.
submit.
Interesting. Okay.
So, what type of company wouldn't have a sales and use tax obligation?
Oh, that's an interesting question. Hey, you know what? I just do sales for resale, Diane. I don't have an obligation. Is that
Well,
true?
I hear
Mm,
that all the
okay.
time, but then you need to
Mm,
have documentation for any exempt sale.
yeah. Mm.
Yep.
It's and do you have a registration requirement? It's the next question I always get
Yes.
to.
Yep.
Yeah.
Yeah. So it's interesting to see, how maybe their clients, maybe they don't have clients that they support. They only support, high wealth individuals,
Mm.
whatever, for income tax. But everybody who sells has a sales or use tax obligation.
All
Looks
right, and
like
it looks like the survey results show about 2/3 of the audience is in the some range, around
Yep.
25%.
okay.
Yep.
Awesome. Awesome. Oh, going back to the slides here. Just going to hit next. And now, so we just went through and we talked about Nexus, like how to think about it, Nexus and filing requirements. And now we're going to just kind of go into and talk a little bit more about the other areas, since you are registering or having the issue of registering now across all the states. Like, you also have to worry about tax rules. And we were just kind of talking about that a little bit, right? But before we go into tax rules, I just wanted to mention this particular slide and why states focus on this so much. It's like, how much does your state actually rely on sales taxes, right? And I always found this slide interesting because depending on where you live, if you live in a state, now I'm a little weird in the sense that I grew up in New Hampshire, so we never had a sales tax there. And I live in Washington State now, which is right next to a state that doesn't have sales taxes. But having said that, if a state has a sales tax, they could have a pretty heavy reliance on how
Absolutely.
much revenue they get just based on the rules of the products they tax, right? So if they decide they need more revenue, a state can be like, hey, you know what? We're going to change the rules and we're going to make a product more taxable, which by default increases the amount of collection they're making. Same way, right?
Hmm.
They can make it exempt and decrease it. But the point of this slide is the revenue is pretty high in a state. If you look at, like 30, more than half the states rely on 20% and higher of their total
Yep.
coffers of money in order to manage, in order to get revenue.
And look at Louisiana. No surprise there.
Yeah. Louisiana, for everyone on the phone, if you ever done work there, Louisiana has a state return, and then they have what are called local or parish returns. And so you
Right.
actually can be filing a couple of returns. There's 64, I've counted. There are 64 separate taxes in the state, well, separate groups of taxes in the state specific to local. And then, of course, they have one state rate.
Great.
product taxability challenges, like why is it difficult to sell products across the US when you're dealing with sales taxes? And this is just some examples we have highlighted here. Keep in mind as we're going through this, states tend to want to tax items they don't consider to be, what's the word I'm looking for? They don't consider them to
Essential.
be essential, thank you, or essential or
Just like
needed. And like,
in the South, they don't tax, they tax clothing. So I
yeah,
guess they figure in the South that clothing is a luxury, whereas in the North, clothing is usually exempt.
good point. And even when it's not, and even when it's exempt in the North, right? So like clothing's essential.
Yes.
We all have to have it. But like, is a $10 clothing item essential? Is a $100 clothing item essential? And so like we start like, and that's where like a lot of the opinions tend to change. And like, if you look at this slide here, like bottled water in Connecticut, right? If I run into a convenience store and buy bottled water, you know what? Is it really essential? I'm going to tax it, right? That's what the state of Connecticut says. But if I'm at a grocery store and I'm buying it because it's essential and I need it, and I'm not going to have it for immediate consumption, well, I'm gonna not tax it at the grocery. I'm not gonna knock. I'll get it out. I'm gonna not tax it at the grocery store. Toothbrushes and dental floss, right? Essential items, right? As Dinah was just mentioning. But hey, New York doesn't. New York doesn't believe they're essential. We should tax them, right? Pennsylvania says, and Diana's from Pennsylvania, so she probably feels they're a better state tax structure-wise. But Pennsylvania, they actually exempt them. The one that, this is always one that fascinated me, powdered drink mixes, which are mostly made up of sugar, right? And if you do any sort of research on sugar, you'll find a lot of states tend to make items more taxable the more sugar that's in
Right.
them, and less taxable, less sugar. And powdered drink mixes are called out in New York, and New York is saying, hey, you know what, Kool-Aid, because when you buy Kool-Aid, does Kool-Aid have sugar added in it?
Yes,
Well, actually,
absolutely.
well, usually they give you the option of adding sugar to Kool-Aid, right?
Right.
Usually it's just the mix,
But
and then
there
you can add.
is no nutritional value to Kool-Aid,
Exactly, exactly.
whereas
And
Tang has a lot of sugar, but there's nutritional value.
they add vitamin C to it. It's perfect.
Yes.
Um, takeout in Colorado is another biggie. And actually, takeout in any state or most states, like when you take something out, like you don't eat it at the restaurant or on premise, it tends to be taxed less. And then if you eat at the establishment, it tends to be taxed more, right? But in this example, takeout in Colorado, straws are taxable for whatever reason. But if you need a cup or a lid, they're exempt. So I'm just looking at the time. Ice cream in Maryland. Now I consider ice cream to be not an essential, if you know what I mean. But if you're looking at that, it's like Haagen-Dazs. Well, we're not. We're gonna make that taxable. Ben and Jerry's, we're
Size,
gonna
I
make it
think.
exempt.
Yeah.
Yeah,
It's the
yeah,
size of the container. Is it
yeah. No worries.
immediate consumption or not?
Yeah,
And the next one's my favorite,
candy bars in
candy bars.
Indiana. Go for it. Go for it.
So the Reese's is taxable, but Kit Kat and Twix are non-taxable, and I bet Twizzlers would be non-taxable too. And the reason why in that particular, yeah, I love Twizzlers, especially the chocolate ones. The reason why is because of flour in the content. So they figure if it's flour, it's a food. So that's how that rule works. But trust me, the rules are not consistent across the states as to what determines a snack food or not. Fascinating.
Yeah. Say, I call it. I always kind of come back to this. I call it job security, right? We
Yes,
and
absolutely.
and there are a lot of research tools out there, by the way, for anyone on here, especially if you're a firm. There are research tools out here that help break all this out, and we're going to go into that a little bit more here in a second. But now we were just talking about products, right? That other slide was all about the taxability of products, and it's one way to think about it, tangible property, like usually that has a pretty specific definition of like the item, how to tax it. But when you start talking about services, things get a little fuzzier. Most states generally say, hey, if you're selling tangible property of some kind, it's taxable unless it's specifically exempted. And we just like, for example, we were just talking about, toothbrushes, for example, right, or food. Services on the other side usually are the exact reverse. If you are selling a service in a state, generally they're treated as exempt unless it specifically says they're taxable. Now, we've got some exceptions here. Like the states here, Connecticut, Hawaii, New Mexico, South Dakota, and West Virginia, they generally tax services. And then narrowly tax services, we got some other states there we got listed out as well. But generally speaking, a lot of people, the reason why we're breaking this out is a lot of people say, of a common mistake, I should say, we usually get is like, hey, we sell services only, so therefore we shouldn't be charging any tax. Oh, my favorite one is we sell services only and we send our technicians across the US to do those services
Right.
personally, and we don't have
Yep.
any tax liability. That's my favorite expression.
We don't have
you
to
already-
file any sales tax returns.
Yeah.
Yep.
I've gotten that quite a bit over the years. Next polling question.
Okay, this is our third out of 4 polling questions. Remember, you need to answer at least 3 questions in order to qualify for CPE credit. The question is, in your 2025 planning, is sales tax on your list to discuss with clients? And your answer options are yes, no, or I don't know. So go ahead and pick the one that's most appropriate to you and then click submit.
Oh, good.
Yeah, a lot of people are planning for it.
Yeah. Yep. It gives you the opportunity to add value to your clients and also to add a revenue stream if you don't currently support it today, especially if you're a smaller firm and you're looking for ways to expand your service offerings. And I talk to firms every day, and they always say, my clients are pushing me to support sales and use tax. I don't want to do it, but they don't want to do it. So I have to do it. Would you agree, John?
Oh, I would definitely agree. A lot of states, listen to me, a lot of firms, bookkeepers, it's like they're doing the books and like
Mhm.
the client doesn't want to have to worry about sales taxes. Like and it becomes so easy to get nexus with those neighboring states, depending on the type
Right.
of work or business you're doing in there. It's like, they're not going to want to have someone do their bookkeeping services and deal with all their bill paying and then have to file the return themselves. They just don't want to do
Agreed.
it.
5.
All right. Next
And
slide.
then I guess the majority was 51.6 said yes.
Oh, got it. Okay.
Great.
Moving on, one more other area, and we usually talk about implementing. So we just talked a lot about in a conversation about Nexus, the states you should be registered, calculating, and filing taxes in. We talked also about product taxability. When you sell items across the US, different states have different rules on how those items need to be taxed. I always like to throw this slide in here because this talks about Avalara's compliance journey in action, and this talks about why Avalara is here, right? You could be someone using QuickBooks, Xero, Shopify, whatever the platform is you're selling these items on. Somehow when you make that sale, you got to make sure you're taxing it correctly. So in order to do that, Avalara, as a lot of you on the phone might know, we have a tax engine that actually sits behind the scenes with those different accounting systems. And we do this for many different accounting systems, but it sits in the back end. And like when you create and generate that invoice, either online through an e-commerce system like Shopify or Amazon, like whatever the system is, when you create it, or when you do it in QuickBooks or Xero, it actually calls out to our system, the AvaTax system. It sends the ship to address, the types of products and services that you're selling, and it actually will return the tax amount back to the calling application. And we do that because that serves a need, right? That removes the need to constantly have to update tax rates
Right.
in those billing systems and maintain and manage the taxability rules on how those products should be taxed. Avalara takes it. And like that is usually firms or bookkeepers usually help the clients address that type of thing, right? And we have an Avalara, you probably know, we have a certified implementation program. If you wanted to, you could learn how to implement our solutions in order to help solve your clients' needs to calculate tax and to maintain taxability rules, right? That's usually a one-time thing. It's usually part of the upfront setup. And then you're just usually helping them monitor the nexus in the state. The back end of that process, though, which is what Diane's going to talk about in a second here, because you have, let's say, 5 or 10 clients that maybe they have Avalara running in the back end, or maybe they're not using Avalara, maybe they're using the internal tax engine inside of their accounting system, but they're calculating taxes on a regular basis, right? And that's what we're trying to show here. There's multiple Avalara tax accounts in the background, but you're looking, as a firm, you're looking for an easy way to centralize and manage that filing.
Mm-hmm.
And that's the tool that Diane is going to talk about in a second. And that's what we call our managed returns for accountants system. And again, this is specific for consolidating how you're filing your information. So what it does is it's a managed returns for accountants is a centralized filing dashboard. It's designed to consolidate all the different Avalara accounts you have running in the background calculating taxes, consolidate it into a central dashboard where you can manage, monitor, and review the information that needs to get filed. Go ahead, Dan, I'll pass it over to you. I know you wanted to start in.
Oh, no, that's fine. So this is a great solution that allows firms and bookkeepers to take advantage of Avalara's managed return services so that you don't have to be an expert in sales and use tax compliance. You can rely on us, but still offer that service to your clients. So a lot of the folks that we talk to feel that this gives them the ability to support the needs that they have for their clients. So,
On the Avalara, go ahead.
gonna go ahead? Go ahead.
On the Avalara for Accountants side, we have 2 solution offerings that we offer in this. Diana's going to go ahead and show the first one, our managed returns for accountants. It's a centralized dashboard that is designed to, like, again, consolidate all the returns that are due for all of your clients in like one central view. And the nice thing about that particular offering is like you're not having to deal with the actual preparing the return, filing and paying the return, and like dealing with notices. It's like, as a firm, since you might not file these returns on a regular basis, or you might not have, you just haven't done them, you can actually offload all that to Avalara. Avalara can handle the filing, the returns, managing and maintenance of all that stuff. All you're responsible for is getting the information into the system. And Diana's going to actually walk through and show that. If you had a situation where, you know what, I want to own the entire filing process of my client, I want to own the getting the data set up and in the system, and I want to own filing the actual returns myself, we have another offering, which we call ARA, which is Avalara Returns for Accountants. A lot of clients use that when, maybe their client has a lot of edge cases. Maybe they like to manage a lot of back filings for their client because they had problems in the past and do a lot of amended returns. We have a lot of firms that use it if they do voluntary disclosures for their clients,
Mm-hmm.
or like cleanup work for basically past periods, and they just want the flexibility of generating returns any period they want, basically.
Right. Is
Having
it
said
time
all
for
that,
the demo?
I'm going to go
All
ahead and
right.
pass it over to you for the demo.
I am going to share my screen, and I just want to start. So we started this whole discussion about, oh, it doesn't show it here. Hold on, let me change the screen. There we go. Share. So we started the whole discussion about economic nexus and monitoring economic nexus for your clients. This is the heat map that is included with managed returns for accountants and Avalara returns for accountants that allows you to track the nexus activity by client. So this is one client, and you can see where it's red. That's where the client has met the state nexus threshold. And then the green ones are where they have those returns turned on. They already have Nexus. And yellow is when it gets to 80% or more. So you can do some planning. You have some heads up that it's coming. This is going to give you all the information. And you can see that the threshold start dates vary because the look back periods vary. So all of that's built into this solution to give you the ability to see that data. So I've got to go back here and share again and share. There you go. So this is the dashboard for managed returns for accountants. I'm going to do a quick overview, high level. I'm going to go through some of the configuration, show you how easy it is to configure. Then I'm going to show you the different ways you can get transaction data into here. Then we're going to look at the reports and the returns, and then talk about notices. Again, put your questions in the Q&A and we'll get to them after we're done the demo. Anything you want to add, John, before I hop in
Oh,
here? Okay.
awesome. Looks good.
All right. So across the top are going to be the main menu items. It is pretty user intuitive. If you have a client that you need to add, you just come here, click the plus sign, and we're going to have a 3-screen wizard that's going to ask you the basic information that's going to populate on all the returns. Now, things like legal entity name, FEIN number, address information, and one of the other elements of the configuration for a client is going to be the kickoff of a limited funding power of attorney. So similar to a payroll solution, we will pull the funds for the liability. Now, when John was talking about linking your clients' billing platforms or POS systems or ERP, if they are using AvaTax in the front end to calculate the tax, you can just link their account by adding the account ID and the account name. What that does for you is it eliminates the need to get transaction data into your dashboard. It will come across automatically from AvaTax into your MRA dashboard, and all you need to do is review that data and approve it. So the firms that use us with their clients who are using us to calculate on the front end find that they have a greater margin because they don't have to spend as much time on the returns process. All right. The other area of configuration is going to be setting up the filing calendars. So we support all of the standard sales and use tax returns, state and local. John talked about Louisiana. There's also Colorado, Alabama, Arizona, and a couple others here and there that have locally administered returns, where that means you have to file a state return and then you have to file a local return. So all of those returns are supported in here. To add a return, there's an easy process here. Again, you're going to hear me say this a couple times, 3-screen wizard that's going to capture the information about the return. If your client has a lot of returns, we have the filing calendar request wizard, which is really hard to say. And you can come in here and you can just import the returns that they're required to file. So again, this is after the point where you've determined nexus and you know that they need to be registered in the state. If you need help with registrations, a lot of the firms that we deal with, they do registrations. If you want to do registrations, you can. But some of the bookkeepers and the firms that we deal with don't want to deal with it at all. So they will ask us to do registrations for them. Once the return information is configured, you can view that return information in the centralized database. So you're not going to have that name and password on a post-it note underneath your keyboard on your desk. It's all going to be stored in here. Now, Avalara doesn't usually use the username and password. We have our bulk filing IDs and we have direct contact with a number of the states where we'll just file directly with the state on behalf of your client. Where we would use it is when there's a notice. So because you're taking advantage of our managed returns service, we're responsible for timely and accurate filing of those returns. So as long as the data is in the system, it's our responsibility. So if there are notices for a period that we filed for, that notice is our responsibility to resolve. And in those cases, we're going to need that username and password. Um, and that is the configuration. So you've seen that it does not take a whole lot to configure this dashboard. There is training, of course, so that will assist you. There's both online training and in-person training available. The
And
next part of the, go
I
ahead.
would just add too, like after you've done that setup, we actually have some checks in the background that happen is actually someone actually reviews that and approves it to help you
Right.
out through the process as well internally here at
So-
Avalara.
Yep. And there's a would have a compliance manager, and their responsibility is to get those returns filed. So they're a support resource for you and can assist you if you need that assistance. Now, there are three ways to get the transaction data into the dashboard. We talked about one of them already. If your client is using Avatax on the front end, you link their account and all that data appears automatically in the dashboard. Um, Let me just go in here. And these are the transactions. If they are not using Avatax on the front end, John referred to it previously, we have what are called extractors. And those extractors will connect to some of the most popular systems our client firms and bookkeepers have clients connected to. Those are QBO, Xero, Amazon.com, Walmart.com, and Shopify. So what those extractors do will pull your client's account daily and pull the transaction data across into Avatax. Now, you're probably saying, well, Amazon is collecting and remitting for on behalf of my client. Yes, but those dollars often need to be included in the gross sales on the return and then identified as sales for resale marketplace sales. So you can configure it so you can pull those transactions in here, and we won't calculate the tax on them again. We will just report them as appropriate. Now, the transaction data in here is going to show you the information for each of those transactions. And that is going to be the header information is here, which will give you all that detail. And then you can break into the line item information to see not only the allocation of the tax across the jurisdictions, but you can see the rate. One of the other items here will be that we will default to calculate the return based off of the tax that was collected by your client. And then we'll identify if, based on the information you sent us, that the calculation was different. And there's actually a report that you can run so you can see if there's a variance there. So it gives you some ways to check on the front end calculation if they're not using Avatax. If they're using Avatax, it's going to match. I don't know if you wanted to add anything about the transactions, John.
Nope, I'm good. I'm good. I won't
Okay.
interrupt your flow. Oh, you're all good.
All right. So that's the transaction detail information that's going to be in here. Now, typically, what a company will do or a firm will do is they will go, and I have to change my share to the report. They will evaluate the reports to make sure everything ties to the GL. So this is a sample of one report. We have plethora of reports in here that break out the liability between either state summary or jurisdiction summary. This one is my favorite report because it breaks it out by the return. You see, I have a couple rows highlighted here. These rows are jurisdictions where I had transaction volume, but no return configured. So not only do you have that heat map, but you have this report to identify where your client may be processing transactions and may need to think about the economic nexus. Now, this is going to break it out, as I said, by return between sales, consumer use, and seller's use tax. If there are credits in a jurisdiction, we track those credits for you, and will apply those credits when there's liability to go against them. There are a couple states that allow you to do the negative amount on the return, and we will do that. But for a majority of the states, we'll just hold on to that credit until there's liability to go against it. We also file timely to take advantage of any vendor discounts. And then any rounding information is here as well, making it easier to tie to the GL. Used to drive me crazy. I used to use a compliance company and they would not give me that information. I could never tie my GL out. And this is the total amount due to Avalara for the remittance. So this is the amount your client would need to have funded in their account for us to be able to file the return. So let me switch back.
So what that means is Avalara does a single pull from your client, and then Avalara is now responsible for pulling the payments and filing all that information on your behalf.
Right. Now, that was one report. There, as I said, there's a number of reports here with different filter capability, giving you what you need in order to reconcile and make sure that you can get the return information to tie out. The final step in the process is to come in here and approve the return. So I am just going to change my period to October. And you can see I have this return approved here. If you want to view the information on the return, I got to select it. There's a PDF image of the return. So you have that available to you to download and view. That's the Texas return. It breaks out all the information. And this will be the confirmation. I don't have one in here. They don't let me file returns from the sandbox, but we'll get a confirmation number for that filing and remittance. Now, the final step is just to come in here and approve. Whoops, I'm clicking all over the place here. Oh, that one's approved. This one, you just click approve, and that tells us it's ready. Now, there is a schedule associated with all of this, and all of the data needs to be in. The returns approved by 5 p.m. Pacific on the 10th. And then we do an ACH pull between the 11th and the 14th. And then we're filing those returns to get that early remittance payment discount for the returns. If there is a notice for a period we filed for, you can add that notice, just scan it and add it in here, and our team will work that notice. You can also add the notice from the actual returns. All of the returns will be here available for you to download. You can come in at any time. If you want to download all the returns by client, you can do that, and it'll put it in a zip file for you with all the returns and the confirmations. You can do it across all your clients one at a time, whatever works the best, but it is available here in the dashboard. Did I miss anything, John?
Nope, did a great job. The only thing I
Okay.
always comment on is, like, we always talk about, clients, for whatever reason, they all want to see the PDF of the return. And how many returns do you think Avalara actually files that are in a form? Like, how many do we actually mail out is the question. And we actually mail out like I think there's only like one jurisdiction we mail. And I think it's in Alaska somewhere, if I remember correctly.
Is it Alaska or Louisiana?
Maybe it might be, I forget now, but like I guess the thing here is, like, most everything is done electronically, like the actual PDF doesn't, but people still want to see it.
They want that. Yeah,
They
they
want
want the
that actual,
paper.
they want the piece of paper. It kills me. All right, moving on to the next. Thank you very much, by the way, Diana, for
Yes.
showing that. Um, moving on to the next slide here. You know, Diana and I just spent a bit of time here talking about the different tools we have for accounting firms or bookkeepers to utilize our tools or our systems to help your clients stay in compliance. And that is why Avalara for Accountants is here. We're actually here to help you with three different things. Certainly, if you have a client that has challenges and needs help automating tax calculation in their accounting system, such as Xero or QuickBooks, you can certainly refer that client to Avalara. And probably a lot of you know there's some revenue opportunities for you there when you do that, right? When you refer, there's commissions that we have set up for you on that. But you can refer them to Avalara, and then Avalara can take the client through the process, if you want, of having them set up Avalara. And if you don't want to do the tax returns and you want the client wants to do them, we can actually, refer the whole thing over, and Avalara can help your client set up and file returns and also set up and calculate taxes. That's totally an option. If you want to move to the next tier though, so again, you can refer and have Avalara handle it all, or you can actually implement the solutions yourself. So Avalara does have a training program. It's called the Certified Implementation Program, and it's specifically set up for our partners. And there's training classes through Avalara University that you can take in order to learn how to implement our products, right? And that could be implementing our AvaTax calculation engine with Xero or QuickBooks or whatever other accounting system you're looking to work with. And it also can help you set up and implement our return solutions or set up and implement our Avalara returns for accountant solutions. It's all there for you. But again, you can implement the solution on their behalf. The other area we help with accountants is the bottom part there is with our tools. So we just showed you how you can use us to calculate taxes and certainly how you can use us to file returns. But the tools are like everything else. You might need help with registering your client. Maybe you're not comfortable registering your client. Well, Avalara has tools to help you do that, right? Maybe you're not comfortable doing a nexus study or a risk assessment or like an analysis. You can do that yourself, or Avalara can help you do that. The other area that this comes up a lot is research. Avalara has research tools. If you're trying to figure out how to tax something, you're just confused about like how states interpret it. We actually have tools to help you do that, and you can ask us questions to help you with that process as well. Whoops. Managing sales tax compliance, and this kind of breaks down the different tools that we have here, but like when you're managing sales tax compliance on behalf of your clients, there's a couple of things, but you can actually use Avalara risk assessment to figure out what your client's potential exposure could be. Maybe you're not comfortable doing that research yourself, you need help with that. We can certainly help you with that. Avalara has a licensing product if you need to use Avalara to help you license, and that could be sales tax registrations or whatever other types of licensing you're trying to do at a state and local level. We actually have tools to help you not only get that registration or that license, but help you manage the recurring updates you need to do that information. We can also help you calculate. There's Avalara AvaTax can be used to help calculate taxes, as we were talking about with Xero in QuickBooks. And again, you as an accountant can refer and have Avalara manage that process with your client, or you can take on that and do that yourselves and charge the fees yourself. We didn't talk about Avalara's exemption certificate management, and I actually got a question in here that I answered during the webinar about it a little bit. But there are documentation requirements when customers say they're exempt, or customers say they're manufacturers, or they fall into a certain industry that has specific tax rules. There's documentation you need to get from that client that you need to manage and maintain for audits. We have tools to help you do that. And last but not least, Avalara certainly has returns. We have a returns module, and we can use that returns module to help the clients file the returns themselves directly, or you as a firm to help you manage all of your clients' returns that are due and help you manage that workflow process. Anything you wanted to add there, Diana?
No, the only thing I wanted to add was we got a great question in about summary data. So if they have a client who has, a single location, they don't have send sales anywhere, can they just put in the summary data? And you can upload a single line of data or 2 lines of data into the dashboard that would allow you to utilize it for filing those returns. And I didn't
Oh yeah.
really touch on the mapping of the transactions, but any report that you can get from your client's source system, say they have Square, can map that transaction report so that you can just upload it into the dashboard to get that transaction information or the summary information into it.
What most firms do is when that like if they have like 1 or maybe 3 or 4 stores,
Right.
they create like a template in a spreadsheet. So they
Yep.
tell the client, here, just fill this out, fill in the sales
Yep.
numbers for those 5 stores or whatever it is, and just makes it easy for you. You're going to get the information back from them in the same format each time. Super easy to upload it. The only time that gets a little tricky is there's a couple of states with a couple of nuances. Florida and Tennessee is where it usually comes up. It doesn't necessarily upload the wrong data, but it just puts it on the return that needs to get a little bit of adjustments done to it. But
Right.
other than that, most people do it that way.
But most of our
Um,
team, if not all our team, has done compliance at Avalara, so they know all the tips and tricks. They know all of the little potholes that you can come across, so they will help you. It's truly a white glove service model. And I think we have one more polling question.
Yes,
And
we
this
do.
one, yeah, go ahead.
One more question for the audience, and that is, would you like to learn more about how to help your clients with sales tax compliance? And the answer options are yes, no, or no, thank you. So while you're thinking about answering that, I just want to check real briefly. Diana and John, do you have any other last comments for the audience before I wrap us up here?
I think we're good.
Okay, excellent. Well, first of all, thank you all so much for joining us today and sharing your time with us. Thank you, Diana and John, for an excellent presentation. We hope all of you enjoyed this webinar, and you can find our upcoming webinars as well as later today, the recorded version of this webinar on the on the CPA Practice Advisor website. That's cpapracticeadvisor.com/webinars, and you'll find all that there. We'd like to thank Avalara for making this event possible and for enabling us to offer a free CPE credit to each attendee. And when I finish talking here, you'll be presented with a post-event survey. So we hope you'll take a moment to fill that out just so that we can continue to improve our webinar series. You will receive your CPE certificate in your email box later this afternoon. So look for an email from CPA Practice Advisor. If you have any questions about CPE, you can contact me directly at gperry, Gperry, at cpapracticeadvisor.com. Also, if more people are watching this webcast with you at the same computer and they need CPE credit as well, you can send me their information, their name, and their email address, and we'll issue certificates to them. That's gperry at cpapracticeadvisor.com. Thank you, everyone, and our audio will end now.
Thank you.